Hello guys, what is going on? What a week, eh? Oh god. The stock market crash is imminent and is happening now as we speak. Financial crisis, inflation and money losing value rapidly are now a common thing. The dollar, the pound, the euro, the gold are all losing purchasing power, hurting not those big fishes, but us, the small retail investors. In the first half of my video, I will quickly go through my last week portfolio performance, and in the second part, I will give you my 5 cents on what's going on and how we'll take advantage of the situation. Because there are in fact money to be made, as what would Jim Cramer say, there is always a bull market somewhere, and I'm here to help you find it. Right, my portfolio is still £700 in the red, but I'm 2,500 in the green. That's overall. Stats that are almost the same as last week, but with a small difference that at one point, was it a Friday, I was down 1,500, which was the largest temporary loss since I first started investing 10 months ago. During last week, I kept on deploying small amounts of cash into Tesla, Spotify, Shopify, Google, Apple, Facebook, and Amazon. Yeah, I know. They will continue dropping. That's why we'll average them down to the bottom. I have also kept on buying my UK companies, those ones that I've been buying for the past 4 months, including Carnival Cruise, National Express, and TUI, at small, really tiny portions, as they have started falling back down, as I predicted when I told you to sell them all out, because they will start dropping down fast. I have also kept on following Cathy Wood's ARK Investment daily trades. By the way, speaking of her, let me just show you a little interview with her on CNBC. An interview during which she explained that the fund is expecting those huge drops and they know what they're doing, and the market sell-off has not come by surprise.
The FinTech Innovation Fund, and even other areas of the ETFs that you have. Are you worried that as rates go up, those stocks could come down?
Well, I do believe if rates were to take a sharp turn up, that we would see a valuation reset, and our portfolios would be prime candidates for that valuation reset, of course. Now, one of the things that I've found interesting over the last really 20 years is that the S&P's PE ratio tends to peak out in the 20 to 25 times range of the forward earnings. And I think the reason for that is most portfolio managers and maybe quantitative researchers are looking at normalized nominal GDP growth in the 4 to 5% range, which is where long-term interest rates should be normalized. We actually think normalized GDP growth is probably closer to 3. Now, if you think, and that's where long-term interest rates should stabilize. If you think of 20 to 25 times, that's 1 over 4 to 5% growth. So it's the inverse of the growth rate, the nominal GDP growth. And that's where it seemed to be peaking out. We think there's actually longer term. I agree with you, Scott. There will be a valuation reset. There will be fear, I'm sure, and we will use it to our benefit, concentrating our portfolio to our highest conviction names. But I think longer term, especially given the powerful growth trajectories that the 5 innovation platforms around which we revolve all of our research, that those trajectories are so powerful, that these multiples, these companies are going to grow into their multiples a lot faster than most investors are now expecting. And so that's a source of confidence for us.
Steve Weiss has a question for you, Kathy.
And I also kept on buying my Sparks, my favorite Sparks, which last week they've taken a massive beating, but I saw that as a good buying opportunity. And also, I started buying gold. Yes, I am buying gold. Most precisely, I'm buying Barrick Gold, a really famous Canadian gold and silver producers. But for those of you that are looking at the screen, looking confused, I will explain immediately. Gold is used to store value and wealth, right? Yes, I know that there are other assets that you can store wealth and value at. For example, bitcoins. But yeah, anyone could store and preserve value into whatever asset they see fit, right? But gold is much safer, much safer than Bitcoin. Or it's which is like almost the same difference in if you end up comparing in volatility or hype, the two stocks, the Coca-Cola and Tesla. That is the difference between gold and Bitcoin. And well, yeah, some of you might say, the gold has dropped a lot, blah, blah, blah. But yeah, it has. But when does that normally happen? When does normally the gold is cheap? Well, that's when the economy is doing very good. The money are expensive, the gold is cheap. But is that in this current climate? No, that's not the case. It's exactly the opposite. So the gold should not be dropping. The gold should be going up, and it will be going up soon. Right, currently we have Barry Gold trading at just under $20. During the peak of the pandemic, $30. Before the pandemic, I was at $16. So I hope you get where I'm going with this. When the economy is fully reopened, everyone will realize how damaged the economy actually is. But then the government would have increased the interest rates. Okay, here in the UK, we are soon to start paying the highest income tax since post World War II. What is this? There will be no more stimulus. There will be no more furlough. The money that are in circulation, there will be so much. They're so deleted. 12 months of printing and printing money. What was gonna make to those money was gonna make them become extremely weak, meaning that gold and possibly Bitcoin will shoot up. But gold is safer, cheaper, and more or less hated by those so called dumb money, would attract those smart money, protecting and also increasing our wealth into those uncertain times that are to come. And it stays that way. We stay reopened without any other issues. Yeah, so that's what the prices are. So the market basically sees about 6 to 12 months ahead, and at the minute it prices them to perfection. For example, travel companies, they've gone very high. Cruise is getting back on track. Airplane companies as well. But none of them are actually making money right now. They're just not making money. All of them are priced for perfection. Definitely not a buy at the minute. You might ask why. Well, soon you will see that they're gonna start with share offerings just to raise capital to cover all this debt they have accumulated, like high interest debt, or just to buy out all these ships and planes and other assets that they've used during the actual pandemic as collateral to receive those loans, so they can start using them again. But what would that happen to the stock value? Well, the price of the stock is actually going to drop by a lot because they would dilute the shares, as simple as, and they're still not going to be profitable. So basically, those of you who own those stocks, well, advise you, sell them all out, get rid of them now, and buy them off in a couple of months. Okay, there will be not much cruising all the way to, I'd say, September, October, and that's if we don't get another what, third, fourth, fifth spike. And to be honest, the market in general, in my opinion, in my eyes, is not considering this one major problem. What will happen during the winter? The possibility of new lockdowns due to people still not being vaccinated, the restriction being removed way too soon, or simply the people socializing way too much without having one thing in mind just in case, and blowing the R number out of proportion again, or just a new strain of the virus mutating as this virus, well, that's a seasonal virus. It mutates every 12 months, normally in the winter. And if that's the case, what do you think is going to happen? Well, oh, is that going to shut again? But unfortunately, it's gonna be even more painful for the economy because it's much easier to keep one thing shut rather than open it, close it, open it, close it, open it, close it. And who do you think is going to benefit from this? Well, yes, it's going to be gold. It's going to go about $30 plus like it was before. We are buying it now. It drops, I buy. It drops, it drops. Same thing. Google, Apple, Microsoft, Amazon, they are still going to go back up where they were. They might even go even higher because all their competition might not even reopen anymore. But yeah, let's look at it from the other perspective. None of that happens. Hopefully it doesn't. Well, all these things, all these assets, the gold, the Apples, the Microsofts, the Googles, they, as I said, they're here to stay. They're not, they're only going to increase in value. But yes, it will take slightly longer than 12 months period. But still, they are safe assets for you and me to store and save wealth. Well guys, thank you all for watching. If you have liked the video or found anything that you found useful, please hit the like button. If you got any suggestion, feedbacks or questions, stick them in the comment box below. Otherwise, thumbs up. If you're not a subscriber, subscribe. You help me grow the channel. And guys, stay safe and I shall see you in the next video. Bye.